Hey guys, VCHA Lifestyle here with another video regarding what's really happening in the world at the moment. I'm not 100% sure, but I can give you a quick synopsis, and hopefully you guys will get the gist of what's actually happening, because like, as far as I'm concerned, all these central banks are bloody lying anyway. So let's listen to this.
Risks relating to the pandemic have declined, but the war continues to be a significant downside risk to growth. In particular, a major risk would be a further disruption in the energy supply to the euro area, as reflected in the downside scenario included in the staff projections.
Here's my issue with first part of that. Blaming the war. Yes, the pandemic is largely to blame for this, because they all went out, all out, spending loads and loads and loads of money. And not being funny, a lot of it was defrauded and given to people who should never have got it. They have had a massive transfer of wealth throughout this pandemic, and now they're blaming Russia for more transfer of wealth. This is what's happening. You cannot blame Russia for a war that could have been avoided. This could have been avoided. They wanted this. Anyway, let me carry on.
Economic sentiment could worsen, supply side constraints could increase, and energy and food costs could remain persistently higher than expected. The risks surrounding inflation are primarily on the upside. The risks to the medium-term inflation outlook include a durable worsening of the production capacity of our economy, persistently high energy and food prices, inflation expectations rising above our target, and higher than anticipated wage rises.
All this is their fault, right? They could have seen this happening. I'm not saying they could have predicted Putin's war, if that's what you want to call it. But at the end of the day, here, this whole thing could have been avoided, including all that overspending on a pandemic. Right, so I move on to another one that I've found.
The system is failing. We're going to have more homelessness, more unemployment, and the government has to print more money. It's a command and control economy where the government tells you everything. I just don't trust our government. And they're going to have to start printing very quickly. And the more they print, the less value, purchasing power the dollar has, or the loonie, or the yen, or the peso. People are talking about inflation. I think we're in depression right now, and we're going to be the biggest depression in world history.
In the 1970s, that's when the world was changing.
The biggest bust in the history of the world is coming up. It's pensions. They trusted the government. They trusted their pension would be there, and it's going to go bust, and that's us. We get crushed.
What you just heard there was Robert Kiyosaki explaining what's actually happening to a certain extent, and there's more to come, because with this one here, I mean, it's really playing out at the end of the day.
Rate hike, we are, 1.35% is where they come in for the July decision. So they've raised by 50 basis points. Philip Lowe, of course, was guiding that this would be the bandwidth between 25 and 50 basis points. They've done 100 basis points now. September, this is the third meeting in a row where we've seen a rate hike. What will they signal in terms of the outlook going ahead? That is the critical thing. Of course, the Aussie dollar was a two-year low just the other day. Let's bring in Jules into the conversation. So 50 basis points as expected. Of course, Australia deeply affected by flooding at the moment. But inflation is high, but not as high as other major economies, Jules. Now, this is interesting when it's on the forward guidance in regards to the inflation outlook. They will take further steps to normalize monetary conditions. Jules, join me in the conversation here. 1.35%, 50 basis points, pretty much as expected.
As expected, Manus, and as you say, we've got inflation very high, a 21-year high. In fact, when you look at that core CPI figure in Australia, really interesting that they are pointing to the pain that these floods are going to have on higher prices. But as you mentioned, it is a balance here in terms of trying to rein in some of these very strong prices. They're saying they'll monitor data to determine the timing and size of further rate rises. We've already heard from Morgan Stanley expecting another 50 basis point hike in August as well, and quarter point hikes through to November, taking the cash rate to 2.6%. I think what's really interesting on the T-Live blog that Bloomberg Terminal subscribers can follow commentary coming through from a lot of our analysis. And Garfield Reynolds says, look, there also is this these recessionary fears. We were talking yesterday about Nomura saying Australia could face a recession. So
see, they are raising interest rates. Interest rates are going to continue to rise again. But Robert Kiyosaki said eventually they're going to have to start printing more money because this can't continue. They've been doing it for decades, for God's sake. But what happens then is it then puts a pressure on generations to come. And what we need really is liquidity. And there is none in the system at the moment. The Swift system does not provide liquidity. What provides liquidity is Ripple. So I'm just going to play this video, and this really does explain the great transformation of wealth. And it is happening. Regardless of what people think, regardless of what the crypto market is doing at the moment, it may be down, but everything's on sale in my view. If you're not in it, you're not going to win it. Anyway, let me play this video.
Why are you calling this the great crypto conspiracy? Okay, and when you explained it to me, it's really, people should go to jail, but it's not illegal. No. And this is really horrible. And it's why we all feel so freaked out, but they are feasting on our savings, and it's an enormous robbery. Quite honestly, it's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid 90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, in the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
see what happened there. I mean, listen to what they do. This is what they do. People should not listen to what they say, because there is an awful lot of FUD in the market. They're talking about cryptos, especially Bitcoin, using an awful lot of electricity and all that kind of stuff. But I reckon they're buying it up because it's a limited amount of coins. There's only 21 million. These people are not stupid. They want you to be stupid. They want to take away your wealth. And he's talking straight up. In fact, this is exactly what is happening. And people need to wake up to that fact. So this brings me now to Ripple and all the money, a history of innovation and trust. Ripple works across all these technologies, XRP, Ledger, XRP Unity, right, anyway, let's listen to this quickly.
So if we look at this chart, the history of money, it really is a history of innovation back from the days of barter, right? Barter started off as a way of exchanging value. As you work your way along, most of you are probably not as old as me. I worked on, my first job in IBM was I was working on in the Czech area. I was working on something called the IBM 3890, which was like a check sorting machine. Like you put checks in it, it sorts into different sort codes for banks. It's not very interesting. But you see the evolution there. And, where we are now is digital money, digital currency. As we heard earlier from many of the speakers, this really is in some ways a more transformational technology than any of the previous ones. When we think about different forms of digital money, again, this is reinforcing what was said earlier. Cryptocurrencies, in terms of native cryptos like XRP, Bitcoin, Ethereum, they're not all the same, right? They're not all created equal. I think what's becoming much more popular in the industry now is more sustainable technologies. So the XRP ledger and XRP is there's no mining or proof of work or proof of stake involved. So the computational cost of validating transactions is almost zero. Right? Very, very low cost, very stable in terms of pricing. Stable coins, again, not all created equal. You have a massive range from the algorithmic type stable coins. We all know the Terra story from a few weeks ago. And then now what we're seeing emerging is stable coins being issued by regulated entities. So I can't give you the names yet, but there's two projects we're working on, one in the UK and one in the US, working with banks that are regulated who will be issuing stable coins, and the reserves will likely to be held at a central bank in central bank accounts. So very different from the algorithmic stablecoin. We as Ripple work across all of these technologies, and then of course you've got central bank digital currency.
All right, guys. So what you're hearing there and what you heard there was about Ripple and what they're doing in innovation. These are the type of technologies that are going to work in the financial sector. I mentioned them before. There are 5, and they're on the WEF video that I did. There are 5 of them: XLM, XDC, ALM, XRP, IOTA, and Algorand, I believe, are and Solana was mentioned, but I've mentioned this before. Solana has issues. It has crashed several times. I'm not sure how that one's going to pick up. Whether they're going to fix the issues with that, whether they're going to. I don't know. I have no idea what about Solana, but I know I have an HBAR as well. I forgot to mention. There are more blue chip and worthy technologies out there that will be used in the system coming in the ISO 222 system. There are. You guys need to do your own research. HBAR is one of them. VCHA is another. There are over 2,000 cryptos on the market, and there's only going to be a few. I'm not sure how many. I mean, I've heard that 20% will survive. That's about it. So you're looking at the maybe the top 200 coins in amongst that lot, or maybe some small. I don't know, some lower priced coins. I don't know within that lot, but I do know XLM. I do know XDC. I do know Ripple. Will be in that mix, and they're very, very, very cheap at the moment. I mean, you're talking Ripple at 30, 31, 32 cents or whatever it is at the moment. I'm not quite sure. You've got XDC at like pennies. I mean, you're talking like I think 2 cents, maybe 3 at best. You have XLM at 11 cents or 12 maybe at the moment. I don't know. I haven't checked the markets today, but those are the cryptos. I mean, I have HBAR. I think that's about 8-9 cents. Not financial advice at all. Please do your own research. But the transformation of wealth is happening, and think about it from this perspective. If they're transferring it to themselves and telling you guys not to get into it, what are you going to do? Ask yourself that question. Are you going to sit there and take that, or are you going to get involved? And are you, another thing you ought to consider as well, taking your cryptos off exchanges. Don't keep them on there. Alright, you can use my link if you want in the description. Also, do your own research when it comes to cold wallets. There are other ones that you could use on your phone, not your keys, not your wallet. But I prefer to keep mine completely off in case I lose my phone, do all that kind of stuff. You can recover them. There's no issue with that. But I mean, like, it's going through all that hassle. So make a choice anyway. Don't get scammed. Get regulated. Look at what's going on in the market. Don't be fooled by the lies and the FUD that's coming out there by these big institutions and these media corporations. Oh, crypto is this, crypto is that. It bollocks, okay? Absolute bollocks. They are trying to FUD you out of the market, right? The UK is moving along with a CBDC and a stable coin. Come on, wake up. All they need is regulations in America. And if that doesn't happen in America, not being funny, Ripple's already set to go elsewhere. They're going to move out. They're not going to
So
stay.
if we look at this chart, the history of money.
They're not going to stay. They're not going to stay in the USA if they don't have clarity, or not given. They'll miss out on the US market. But that's their. It will be the USA and the people who live in the USA that miss out, not us. Not people who live outside there. I'm sorry, but you guys need to do stuff. If you live in America, stop, getting on top of your parliament or whatever you want to call it. Those people that run your country. Anyway, take care. Speak to you soon. Bye.